Folks, Tom Lee just came out and said that stocks are going to go absolutely crazy. The Jackson Hole Powell speech today changed everything, and now Tom Lee is saying that that means that one sector is going to be impacted the most positively, and if you can position yourself correctly now, well, you might be set to make oodles and even poodles of money. Tom Lee's firm Fundstrat also just added some big small cap stock picks, their so-called super grannies, which they believe are set to explode massively. And one of the stocks that we often talk about here on the channel was also just included on the list. I'm not going to leave you hanging, it's Palantir stock. Oof. In today's video, we're going to go step by step through everything that you need to know that Tom Lee and his firm Fundstrat just said, what happened at the Wyoming Jackson Hole Summit, and how this is going to impact you and your money and some big moves that you may want to make. Let's get right to work. Timestamps down below. And as always, if you're the one taking the risk, you got to be the one doing the ultimate frisk. Lots of people, they get real risky without doing their frisky. Okay, let's start. So Federal Reserve Chairman Jerome Powell came out this morning at the Jackson Hole retreat and said, now is the time. The time has come for policy to adjust, indicating that cuts are coming soon. Little Cuddy McGee to those rates. He declined to provide exact timing or to the extent that this is going to happen. However, if you look out to the Fed Fund futures dating out to the end of the year, well, they now think that we're going to go from that current range to at highest, at worst, 450 to 475, and most likely at 425 to 450, and second most likely 400 to 425. And a growing percentage suggests that we'll even get back into the threes. However, that's still just a 6% chance. But most likely outcome points to us being at the low to middle fours by the end of the year. Low to middle fours, which is a solid cut of about 100 basis points. Tom Lee's Fundstrat tweeted this in reaction, quote, real rates are 3x higher than at 2023 Jackson Hole. One of three reasons we expect markets to ultimately view Fed Chair Powell's comments dovishly, equaling risk on post-speech. This has one out of three reasons, the first being the real rates, but the other two reasons are presumably, number one, Powell said that the cooling in the labor market conditions are now unmistakable. So number one, labor conditions, and number two, Powell said that he believes that they are on path to their inflation target. This means that Powell is now switching from a focus on inflation to a focus on labor markets, a reverse of what we saw last year and the year before that. Now let's back up for a second and talk about Tom Lee's thesis, the overall thesis. So Tom Lee's thesis heading into the end of the year is that once the Fed starts cutting, unprecedented money on the sidelines will funnel into small caps. And in fact, his favorite IWM index for small caps is continuing to pump today. The thesis goes, all else being equal, you can think of this thesis as such. If rates are cut, small caps will skyrocket. Small caps rely on low borrowing costs to go parabolic. The combination of cheaper financing, economic tailwinds, and increased investor appetite creates a very, very powerful surge in small cap performance, making them stand out huge the minute that rates start getting cut. So Tom Lee is trying to signal this now because he wants us to get ahead of this wave. But you look at the amount of money in money market funds, it's at about $6.4 trillion. Presumably, much of this will need to find a new home as rates drop. Where will it go? Well, the main options are real estate and the stock market. However, real estate has, for the most part, stayed elevated for the last few years. In fact, it's still at some of the priciest levels in decades relative to income in most metros. And the overall stock market and mega caps are also at some of the priciest levels relative to earnings. So thus follows Tom Lee's opinion that a lot of this capital will find a home in small caps, which for the most part is a sector trading at some of its steepest discounts relative to everything else, while at the same time having some of the best growth rates in the world. But Tom Lee also warns against recency bias. Recency bias means you're going to look at a sector that's underperforming and say, it's underperforming. Well, that must mean that it's guaranteed to continue to underperform. Thus, I should allocate into areas that are overperforming. However, recency bias is a big fallacy in the sense that just because something has performed well or performed bad doesn't mean it's going to continue to do so. If the underlying fundamentals of an economy or a market change, well, what's going to perform is going to change as well. If you recall 2020 and 2021, growth stocks, small cap stocks, the stocks that Tom Lee loves, those went parabolic. However, when rates started going up, they went down. Now that we're in a situation where rates are going to go back down again, well, Tom Lee's saying they're going to go back up again as well. Now, I want you to take a look at this leaked macro research from Fundstrat. So in this, Lee discusses with his clients that a dovish Fed is positive for Bitcoin, is positive for small caps, positive for CRE, commercial real estate, positive for mergers and acquisitions, and positive for cyclicals. But it's negative for energy and negative for healthcare. He explains that right now, real rates are way higher than they've been in the last 6 years and 3x higher than at the same point last year. How does that math work exactly? Well, in 2020, 2021, 2022, real rates were negative because not only was the Fed funds rate at 0.25%, but inflation ranged from 0.91% to almost 5%, which means that if you net everything out, you're essentially getting paid to take out money because the value of the money that is getting loaned is getting eroded by inflation and is higher than the rate at which you are paying to borrow that money in the first place. Pretty beautiful process. Very incentivizing to take out money. But now we have the reverse situation going on. The real rate is 3x higher than it was just last year, and now that inflation on the core PCE at least is in the 2s and the Fed funds rate is super high. Well, the Fed is signaling that the labor market is becoming the more important thing to focus on, no longer the pricing. Now, in terms of the broader market and how it's going to react to all this news, well, Fundstrat's technical strategist Mark Newton said this, quote, "It looks right to stay bullish past Labor Day and expect any weakness into the Jackson Hole meeting to prove short-lived." He explained that if you look back at all the data dating back to 1928, well, August has been the most likely month to mark a market bottom. And if you look at the market bottom we hit this month, well, he's saying, yeah, this is the bottom, and we're going to head upwards towards the end of the year. Okay, so they're saying, hey, Fed's going to cut, markets are going to continue rallying, the small cap sector is going to rally the most, and inflation is going to continue trending down. But what about specific ideas that they are pitching here? What are specific stocks, not just IWM, the overall small cap index, that Fundstrat and Tom Lee believe are buys? Well, Fundstrat put this out and it shows their main list of super grannies and sleeper grannies. As a reminder, these granny shots are essentially thematic stock picks that Fundstrat believes is going to outperform the S&P 500. And they're based on AI, automation overall, and millennials, and the emerging trends with those three themes. And if you look at this list, they just added several really key plays here, and you're going to want to follow these very closely. The first, of course, we have to mention is Palantir. They added Palantir for the first time a few days ago at a price of $32.32. This, of course, has long been one of our highest conviction stocks here on the channel, and it is the leading data analytics platform. I have a million videos on the channel breaking down this company and exactly why one should, or rather could, build a lot of conviction in it. And so I don't want to talk too much about this, but definitely one of the most exciting companies on this list here. I'm glad Tom Lee believes in it as well. They also added MLI, Mueller Industries. Mueller Industries is an American manufacturing company that specializes in piping, industrial metals, and climate machinery. This one in particular stands out a lot. I think this is more of a hedge play. This is the type of stock that is theoretically profitable in all economic cycles. You're talking piping, industrial materials, and climate policy stuff, which goes up and down based on who's in office. Well, all of this stuff is a interesting hedge in the coming environment that we're heading into. This stock is, interestingly enough, very heavy commodities and energy, which kind of contradicts Tom Lee's prediction on a dovish Fed, meaning things would go down in those categories, whether you're talking about commodities or energy. But at the same time, again, it's a pretty nice hedge if his predictions are wrong, and I believe that is why Fundstrat included that on the list. But you also have E+ Inc., which is a little bit more on theme. It's a cloud and data center security play. You have AppLovin, another interesting pick. AppLovin enables developers of all sizes to market, monetize, analyze, and publish their apps through its mobile advertising, marketing, and analytics platforms called Max, App Discovery, and Spark Labs. You also have Bancorp Inc. This is a financial holding company primarily engaged in offering private label banking and technology-driven solutions to non-bank companies. Here you have Bluebird Corp. This is a leading manufacturer of school buses in North America, known for its commitment to safety, durability, and eco-friendly solutions. This one is another one that seems like it's a little bit off. It doesn't really fit all of the thematic ideas that Fundstrat and Tom Lee have proposed, but I believe maybe this is because of the climate energy policy stuff. It seems like if you're investing trying to trace millennial demand, well, millennials do seem to want more climate energy policies and more requirements there and more climate friendly products. So if you're talking about buses, school buses, well, that's one area where you are seeing a lot of investment in EV, clean energy type of technology. The next one you got to look at is Amkor Technology. This is a global leader and certainly very relevant in today's world, but it's a global leader in semiconductor packaging and test services, catering to a broad range of industries, including automotive, communications, and consumer electronics. The company is recognized for its expertise in advanced packaging technologies, enabling the development of smaller, faster, and more efficient semiconductor devices. Amcor's innovation in chip packaging is crucial to the evolution of electronics and technology globally, and these markets are set to go completely exponential over the coming years. So very, very important that they're listing this. You have Blueprint Medicines. This is another interesting one. It's a biopharmaceutical company dedicated to developing targeted therapies for patients with genomically defined cancers and rare diseases. Using its proprietary precision medicine platform, Blueprint Medicines identifies novel genetic drivers of disease to create personalized treatments for folks. The company's focus on precision oncology has positioned it as a key player in the fight against specific cancer types. The next one is Ultra Clean Holdings, which provides critical subsystems, ultra high purity cleansing, and analytic services to the semiconductor and display industries. The company specializes in the design, engineering, and manufacture of key components used in the production of high-tech devices. Ultra clean solutions are integral to performance and reliability of advanced manufacturing processes. The next one, Veeco, is another one that's in the semiconductor space. Veeco is a leading provider of innovative semiconductor processing equipment, enabling the production of advanced microelectronics, LEDs, and compound semiconductor devices. The company's technologies are essential in the development of smaller, faster, and more efficient electronic components. Veeco's precision equipment and expertise support critical steps in the semiconductor manufacturing process. Okay, so there you have it. These are the latest ideas in the small cap space. If you look at the IWM index, that's their main index, where you can find a list of about 2,000 Russell small caps that may be set to bounce quite a lot should Tom Lee's predictions come true. Okay, but wait one second, Charlie. Why exactly should we care about what Tom Lee has to say? Isn't he just a permabull that says everything is bullish regardless of what's going on? Well, for starters, if you look past the headlines, what CNBC reports or what anybody reports, well, you'll start seeing that Tom Lee's predictions are a lot more nuanced than you might have assumed. His insights are, as he likes to say, evidence-based, which means that he's actually providing evidence alongside each of his opinions and predictions. Now, you could say, oh, I'm looking at that evidence and I came to a different conclusion, but at least he has evidence behind it. It's not a gut feeling. Here is a specific example of this. When he says that he believes that markets are going to surge now that inflation expectations are normalizing, well, he's looking at historical data and using that and other factors as evidence. He's not just coming out and saying it randomly. He's looking at what happened in the past when this happened. His insights are not just used by retail investors, but more importantly, his insights are used by institutional investors. They go to him to figure out what they want to position in. People like to knock him as a permabull, but quite frankly, again, his opinions are nuanced and he highlights potential risks and potential rewards. He's not a one-trick pony. But he does long-term believe that innovation, human ingenuity, and overall economic transformations and historical trends suggest that things are going to get better and better and more profitable, and that we're going to grow. So yes, he is a permabull, but he's not one that doesn't acknowledge the risks. And while he's not always going to be right, it's very important that you at least note what he is saying. Anyways, that caps off today's video. Let us know what your thought process is on Tom Lee's predictions and some of the small caps that Fundstrat has highlighted. Let us know if you agree with them or not. Anyways, have a good rest of your day, folks, and we'll see you in the next one.